Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of February 20th through February 24th, where we'll talk about artificial intelligence, aliens, and the markets, and how all of those topics apply to the markets and what kind of strategies, trade ideas we may have on how to play artificial intelligence, aliens, and the markets. So let's get started. So here's our notes for part one of our weekly trading game plan for this week. Again, the week of February 20th through February 24th. This Google document is publicly accessible. You should be able to find a link in the description box below where you can access these notes. It includes links to bonus videos, the tools that we use for our market analysis, etc. And all of our notes for our weekly trading game plans are stored in a publicly accessible Google Drive folder. And you can find a link to that Google Drive folder also in the description box below, so you can refer back to these notes and or other notes from our weekly trading game plans from previous weeks. So let's take a look at where the markets ended up on Friday. As most of the week, it was a little bit choppy. Friday was also options expiration for February, and I heard there was an enormous amount of options expiring on Friday, so that also contributed to the volatility and the chop. We can see all the markets kind of started down. The Dow eked out a small gain. The NASDAQ was still at almost 0.6% loss, and the S&P didn't quite get up to 0.3% loss. So we see the advancers and decliners was pretty split, almost 50-50, although we had 60% new highs versus 40% new lows. We've still got 2/3 above their 50-day moving average, a third below, and again, we've got about 57 above their 200-day moving average and 40% below. You can see, it was kind of split during the day, chopped up and down between bullish and bearish. We see the heat map. A lot of the FANG stocks were very red. Energy, as we'll see when we look at the sectors, was red on Friday, although we'll talk about the sector rotations we've been seeing. The green sectors, consumer defensive, some industrial, some utilities. Again, we'll see that when we look at the particular sectors. Welcome, Easy Mike. Thank you for joining us. Good to see you. Hope you're doing well. Hope you had a good trading week. So if we look at a little bit of the news, still talk about recession, questionable whether that's going to happen, late auto payments, delinquencies, consumer credit issues, economic landings. Wall Street's baffled by the stock market. We've talked about the battle of the Fed versus the markets, the ongoing battle. We saw crude oil declined. It bounced off 80 again and went down, bounced off 75 and went up. So we've been talking, in my humble opinion, again, I think it's pretty much range bound between 70, 75, 75, 80. Natural gas, we saw it was in steep decline. We got a little bit of bounce back late on Friday, and then we'll talk again about our strategies with various commodities. Gold's been kind of hovering in the mid 1800s, and we see the futures are showing the Dow up and the other two markets down right now. Euro recovered a little bit, although a lot of the commodities took a hit from dollar strength due to the inflationary data and the expectation of higher interest rates. And we'll talk about that when we get to the economic data. And then we see the treasuries are short term above 4%, still very inverted, but we saw a push up towards 4%, which, as we've been talking for quite some time, is expected to compensate for the Fed interest rate rates. So let's look at the indices for this week. Look, we can see the SPY is encountering significant resistance from this upper trend line. So it tried to test that trend line a number of times, still sitting above its short-term 20-day moving average. So it's kind of bouncing back and forth between that upper trend line and its 20-day moving average. If we zoom out a little bit, we can see it's still got good support from its 50-week moving average. We've got a doji kind of candle at the end of this week. So again, indecision, but again, pretty decent support. We see a lot of chop the past couple weeks. Just, it's a couple doji candles for the past 2 weeks. So I don't expect a whole lot of movement either. Look at the NASDAQ, the Qs. Again, pretty much sitting at that 50-week support, a little bit of a morning star, so a little bit more negative candle on the Qs, but again, it's just kind of an inner morning star doji type bar on the week, getting that support from the 50 week. So again, I would expect more sideways movement, holding that support unless something drastic happens. Look now. And a lot of consolidation, a lot of sideways movement, a lot of chop. So we see the volatility, the more chop in the past week. So again, I would expect a continuation, more sideways movement, more chop. And again, we'll talk about strategies for how do we play the markets when they're just moving sideways, just chopping up and down. So the IWM, the Russell, a little bit above its 50-week moving average, although again we see a sequence of inner bars, consolidation, sideways movement. So again, all the markets are currently kind of just moving sideways, just kind of chopping back and forth. So again, we wouldn't expect a whole lot of change. We'll look at the VIX. So when we got this inflation, we're going to talk about the CPI and the PPI data in more detail when we get to the economic data and the market's reaction, the various market reactions to that data. But we could see initially there was a significant drop on that data. On the 13th, 14th, we got that big VIX drop. Then on the 15th, it was negative, and then eventually we got a positive reaction on the VIX on the 17th, and then again on the 18th as well, or the 17th and the 16th. So we can see right now the VIX is elevated, it's sitting above 20 now. So I would expect that 20 to act as support now, and we'll see what kind of pop also with the options expiration that fed some volatility into the VIX as well. And again, we'll talk about how we're playing the volatility trade with the VIX going forward as we get to that. So we'll look at the groups and the sectors, and I saw Easy Mike was talking about some of the sector rotations. Notice they haven't gone down as much. Again, we're seeing a lot of rotation. So again, on Friday, and we talked last week, we kind of expected this rotation at some point to go back into utilities, consumer defensives. We saw, a lot out of energy, rotation out of technology. Basic materials is still lagging, but again, that may have a lot to do with the dollar strength. So for the week, again, industrials, consumer defense, again, we saw this rotation back that we were kind of expecting. Although there's communications and technology was still kind of in the middle. Energy very negative. Energy's been very negative. So big rotation out of energy. Watch for the rotation back into energy. You can see, it's been negative for the month. And again, we'll be watching for that rotation back into energy as well. Again, for the month, technology and consumer cyclical are still kind of elevated, so they keep trying to run technology and communication services, and again, consumer cyclical, which is very sensitive to inflation. They keep trying to run money back into that, and then it runs back out. So again, we'll see a lot of sector rotation, particularly with these laterally moving, choppy markets, sideways markets. I think we'll see a lot of sector rotation. So keep an eye on, where's the money flowing into, where's it flowing out of, and we can trade accordingly. So we'll look at the industries. Just some anomalies. I think DraftKings had some positive news. So the gambling and with the Super Bowl, they had positive. Easy Mike was talking about Mondelez, so packaged foods was positive. Confectioners, see some utilities are positive. And if we go to the negatives, see a lot of basic materials, copper, aluminum, gold, silver. Silver didn't, it recovered a little bit, but not a lot. And then a lot of energy, coal, oil, gas. So again, all the energy stocks were very negative on Friday. But we see coal for the week was positive. So again, we've been talking about these rotations. Steel was positive. So again, you're seeing a lot of rotation in and out of various ones of these stocks: coal, aluminum, steel. See, gold and silver were pretty negative still. Uranium was negative for the week, but we've seen a lot of rotation in and out of uranium, aluminum. There's silver. So again, watch for these sector rotations, particularly if we get a little weakening in the dollar. We might see some of these commodities get some sector rotation into them. But it might be short-lived. We might get rotations in and then rotations out as they reach some kind of upper resistance. So again, have to be nimble and keep an eye on these. So again, for the month, basic materials, energy, we've seen this rotation in and out of solar. So there's plenty of opportunities to make money in these sector rotations. So now I'll bring up the economic calendar, then we'll talk about the economic data that came out, and I'll give you my comments on some of these topics. Just a quick reminder. None of this is financial advice. We're not financial advisors. All of our videos and all of our content is for educational and hopefully some level of entertainment purposes only. So let me grab a drink and I'll zoom this in a bit, and we'll talk about the economic data and the market's reaction to it. Okay, so nothing much on Monday. Tuesday, we got the CPI data, and you can see it's a little bit hotter than expected, although it was down a little bit from the previous month. Year on year was, again, hotter than expected, but down from previous. And initially, the markets didn't really react to either the CPI or we'll talk about the PPI data as well. And something I wanted to point out and make you aware of is when you watch these data drops, what I've noticed is it seems like the algorithms catch the headline immediately and they react to the headline number. So if it comes out, higher than expected, we'll see a downward, spike in the markets very quickly. And then as people digest this and they decide, okay, well, but it wasn't a whole lot worse than expected. And then we saw the markets run for a while. And then later in the day, we saw, they say the smart money, the institutional investors kind of take over later in the day. And I believe we saw a pushback down. So just be aware the initial move is often algo driven and may not be the trend for the day or even for the morning versus afternoon. So we see these reversals, these chops, fake out initially, and just be aware and don't get trapped in a negative situation. don't want you to lose money based on these whipsaw movements based on some of this data. Welcome, Kyle. Thank you for joining us. Glad to see you. Hope you're doing well as well. Then Thursday, we got PPI data. I'll go back to building permits. And again, it was hotter than expected. So essentially, both of these tell us inflation is still hot. It's still sticky. The producer price index is the front end of the supply chain. So this says, this will flow to some degree into the CPI as we go forward, because this is the producers. They're seeing higher inflation. So eventually, a lot of that will trickle through to the consumer. And we then heard, a number of Bullard and a number of the Fed presidents have been talking, and they're also providing volatility. The market's reacting when they come out and say, well, Mester and Bullard both said, we wanted 50 basis points before, and now we think we should go 50 going forward. Now people are talking about 325. So the markets are having to adjust to higher interest rates and higher interest rates for longer. So it's what we've been talking about for a long time. It's what we expect, but the market's in a state of disbelief. And so they finally kind of woke up late in the week, and we saw a pretty significant decline. Also, jobless claims was negative because the initial was below expectations, although you see continuing was above expectations. So that says the people that can't find jobs, are having a harder time finding jobs, but there are less new jobless claims, less new people not being able to find a job and filing jobless claims. The housing market, we know, has been in a recession. That continues to be negative. We also saw the Philly Fed manufacturing was negative. So, slowdown in GDP. We've got GDP numbers, I believe, coming up next week or so, and we'll see if, does it indicate a recession? Are we in a recession? Are we headed to a recession? We'll get that data soon, too. So I'll spin through, and then we had OPEX on Friday. Also, just a quick reminder, and we'll look at the economic data for next week, but a reminder that the markets are all closed on Monday in observance of President's Day. So you get a nice long weekend, relax, take some time with your family, recharge, get some education, prepare for the upcoming week. So again, not much on Monday. Fed speakers, so we got CPI. I didn't hear a whole lot coming out of OPEC. I guess, Russia's saying they're going to cut supply. We talked about that before. Again, we talked about CPI. It was hotter than expected. We see the various Fed speakers. Mortgage rates went up. Core retail sales was good. And again, that says the economy's good. So the job market's good. The economy's good. The Fed can be aggressive. It's what we've been talking about for quite some time. So, they might consider 50 or 325s, et cetera. And that's what the market is trying to figure out and reacting negatively in either case. Inventories were as expected. Oil inventories are a big build, but at that point in time, the oil price still was testing around 80. It eventually did drop off. Again, building permits negative. PPI is hot. Natural gas storage, a big, reduction, although it was less than expected, and natural gas prices still went down. So even though the supply is being diminished, the prices are still going down. Leading indicators was negative. So again, possible, recessionary indicators. And you see now the oil rig count is dropping for a while, and the price declined. So people, again, aren't paying a whole lot of attention to a lot of the data, in my humble opinion. And again, in my opinion, things are reacting more on a technical basis than on news and economic data. Again, my opinion. So let's see what we've got coming for next week. So Monday's the holiday. Got import-export data. Got some PMI data. So some, inflationary data on Tuesday. Home sales, mortgages on Wednesday. So PCE, okay. So Thursday, and this is very important because this is the one that the Fed really looks at. You've got PCE and GDP data all on Thursday. So if that is other than expected, that's going to cause market reactions. Plus, we got jobless claims. So I would expect some significant market reactions on Thursday, depending on how this data comes out. Again, if it's other than expected, if it's better than expected, markets will try to run. If it's worse than expected, it's a potential dump. So Thursday, a lot of volatility potentially. Not sure why they're showing PCE data on both Thursday and Friday. Then we've got Michigan sentiment. That doesn't really tend to move markets a whole lot, but it tells us, how is the consumer feeling? So late in the week, more volatility is what I would expect. Still in earnings season. Again, you can find the whole list. You can see, you just flip the calendar over to earnings. You can see who all's coming up with earnings. It, behooves you to keep an eye on both the companies, if you're in a particular company stock or in the same sector. Got Walmart, Home Depot, so those will move. Retail sectors, housing sectors, etc. So again, still significant enough Caesars, so some gambling. Dillard's more retail, Unilever, some consumer. So again, we're still in the heart and of earnings season, and depending on not only what kind of earnings do they report, but what do they say in terms of their guidance, and both are important. And it's again, you'll see the algos will react to the headline number initially, and then as the guidance comes out, if they have their press conference, you might see a big reversal because they might report good earnings for the past quarter, but their guidance is poor, and it'll dump. So again, we have a video, how we trade irrational reactions to earnings and how you can, make money trading earnings in this video as well. We also have an earnings report channel in our Discord. Our Discord's free to join. You can see we have an automatic feed in the earnings channel. So as earnings come out, they will be automatically posted to the earnings report channel. So you can get, real time, real quick results from the earnings. Similarly with the economic data, we have a feed to the Surf the Markets report from the Market Watch Economy. So again, you can get interpretations of this economic data. And I also try to capture the important reports and post them from investing.com in the Surf the Markets channel in our Discord. So again, Discord's free to join. You can find an invite in the description box below, and we'd encourage you to join our Discord, participate in our discussions, and also you can get all this economic news rather quickly. Welcome, Flip of the Shippa. Thank you for joining us. Hope you're doing well. So now we'll jump over to the market screen in Webull. I'll close investing.com. So just a quick reminder, Webull still got their 12 free stock offer. If you open an account, you get 2 free stocks worth $3,000 to $3,000. If you fund it with $100, you get up to 10 more free stocks worth $3,000 to $3,000. Again, as you can see, we use Webull for our market analysis, our due diligence. We do the majority of our trading in Webull, partly due to their great trading hours of 4 a.m. to 8 p.m. So this is the online browser version of Webull, and this is the markets tab. So I like this histogram. So we see, even though the markets were generally negative, we had quite a few small advancers, pretty balanced. So the advancers and decliners was almost equal. So a big tug of war on Friday on the OPEX day. So again, we see the NASDAQ now has a larger outflow than the NYSE. So that's a reversal from the past couple weeks. So again, money flowing out of NASDAQ, probably out of technology. I'll talk a little bit at some point either today or tomorrow about the difference between biotech, semiconductors, and some of the other technologies that I was seeing. Again, you can get a near-term view of the earnings calendar here at Webull. You just hit calendar earnings. You can also see dividends and splits here. But if you're looking for what's coming up in the very near term, this is a nice place to do it. And you can see it says after market close or before market open. So I find that helpful as well. So we'll look at the best performing industries for the week. So education, which is kind of interesting, although I'm sure those are Chinese. Government, well, we talked about, defense. So in the aliens category, that caused some interest in the defense category. So we see some in the government activity. Coal was pretty split for the week. Telecommunications, we've talked about rotations in and out. Satellites, that's again along the lines of the aliens type of surveillance activity. Transports were split. Machineries, little positive. Leisure, again, gambling. Specialty retail was positive. So again, we saw those retail sales numbers were positive, so that got some interest in retail. Containers packaging, so consumer defensives. Again, some education. So let's look at the ETFs. So let's see okay, so down on the Qs, that's the leveraged ETF, short on the Qs, ultra short on short China. And again, along the lines of the aliens, the weather balloons or the blue surveillance balloons thing, again, causing some tension with China. So that had a negative impact on Chinese stocks. Got up on the Dow. Short on the S&P, short on the bear on the S&P. So the Dow's pointing up, S&P down. UVXY had a nice pop on Friday, a little bit on Thursday, but on Friday, so increased volatility, both from UVXY, VIXY. And this is saying up on the Russell. So up URTY is leveraged up on the Russell. That looks like it's up on the Russell. It's a bull on small cap. So they're pointing up on the Russell. That's interesting. Industries, again, utilities, healthcare, industrials, negative on energy, communication services, basic materials, technology, cyclical, defensive is positive, real estate negative, and financials positive. Commodities, coffee, again, we're seeing carbons positive, soft, silver. There's a silver positive. So again, we may see some, so we'll see this in the futures. Looks like there was a gap fill in the silver futures, and we'll see if it's achieved a bottom. It's going to swing back up. Again, silver positive, base metals, coffee. And then treasuries, 7 to 10s, zero coupon, 25 years. So the long end, extended duration. So the long end's starting to get some interest. British pound positive, yuan positive. Okay, so we'll go back to FinBiz and look at the futures. Grab a drink a sec. Okay, so we could see the Dow, it's been pretty flat, pretty choppy. It's got, decent support every time it bounces down to that 33,500 level. It tends to bounce up, so pretty good support, but very, very lateral. Again, we got a little bit of a hammer on the S&P, so it may be trying to hold that support level, but again, very, very sideways, very choppy movement. NASDAQ, same type of thing, although potentially a little more downside on the NASDAQ. It hasn't been able to break that previous high. So again, it looks like all sideways movement to me. A lot of chop, a lot of sideways movement. Same way with kind of the Russell. It tried, failed, come back down. We might see a retest down here. We'll have to see, but a little bit of a hammer there. So more sideways chop potentially. And we see that bounce in the VIX. So again, now the VIX is headed up, broke the previous high. It's above 20. We'll have to see the next, high points in the low 22s, high 22s, and then back up into 25. So we'll see. Although I don't know for any kind of fact, but it seems like, and I heard someone say that the 0 DTE options aren't included in the VIX, but it sure seems like it's dampening volatility to me. So I'd love to hear someone confirm or refute that, but it does seem like it's dampening volatility, in my humble opinion. And we see that steep drop off in oil, again, partially due to dollar strength and also, potential recession. Oil or gold's been declining. We'll see if it holds at 1850 level or drops down to 1800. This may open up some opportunities, although we did see when they go risk off, there's some degree of gold buying, but the dollar strength hurt gold and silver. Again, we see that big drop off in silver, but it may have gotten some support around 21. We can kind of see that gap fill. We kind of expected that gap to fill. It's now filled. We've got two green candles. So we'll have to see if we get a swing back up in silver. Tomorrow we'll talk about specific ETFs to take advantage of these types of opportunities, both in shorter and longer term trading. We've been keeping an eye on palladium. It's looks like it achieved a bottom and now had a little pop up and then down. So we'll see if this is a stable bottom, and we're watching an opportunity here in palladium. The ETF we're watching for palladium is PALL, and again, we'll look at the detailed risk reward profile for that tomorrow. Out of the other commodities have been whipsawing up and down. We'll see lumber made this huge run up and came down to almost where it was before. I skip over natural gas. We see a severe decline. It had looked like it might have had a bottom and then rolled over, went down. It's sitting now at 226. So we'll have to see if it continues to break down, or if we establish a bottom. But there's no indication that we've got a stable bottom. Again, we'll talk tomorrow about our strategy with playing natural gas as well. Yeah, coal's been a monster. It's been good to us. And again, we'll talk about our strategy for our positions in natural gas and also potential opportunities in oil. So lumber that we see again, decline in treasury prices because again, yields had to go up, prices had to come down. We may have achieved a support level on the 30s. The 10s obviously dropped way down. Again, The yields have to go up to compete with the increased Fed funds rate. So, they're talking now Fed fund rate in the middle of the five. So, 5.5 type percent. And again, we've been talking about that type of rate for a long time. Again, we saw dollar strength. Dollar strength hurts the dollar-denominated commodities, so oil, gold, silver, etc., copper, all tend to decline when the dollar strengthens. So we'll see if it continues. We could get some continued strengthening, or we'll see if it'll roll back over. Okay, so let's talk about some of our themes, strategies, the current trends, our artificial intelligence, aliens, and the markets. We'll start with artificial intelligence. And last week we started uh, helping you find ways to find artificial intelligence stocks. As a bonus, we have this video under construction. And you can watch this via the link in our notes. Again, I still need to do the description, etc., but you can watch the video now. Shows you how we're using FinViz to identify these ETFs and then filter these ETFs. So today I want to go into individual stocks, and I'll show you how I use the same type of search. And then we can look at all the individual stocks that are identified under the term, artificial intelligence, and then how we can use the screener to filter those down to meet whatever criteria that you want. So again, last week we looked at this set of 6 stocks, which is ETFs that include artificial intelligence stocks. And today, essentially, the other link is just if you open the 137 items that come up when you do a search on artificial. Again, last week we talked about you can't really search for artificial intelligence in FinViz. It doesn't really work. So you search for artificial, and then you can see in the description the ones that actually have something to do with artificial intelligence. Here we see that AI, C3 AI, etc. So from this list, now we can filter that list down. So we start with 137 in all kinds of different industries with, different profitability, different PEs, etc. And you can then use the standard FinViz screener, the standard parameters in the screener, to filter it down however you'd like. If you just want, technology stocks or biotech stocks or whatever, you can select that particular industry. I'm particularly interested in those that make money. So I'm going to select the fundamental tab, and I'm going to select PE as profitable. So let's see, so now down from 137, now we have 44 profitable stocks. So now again, we can filter those down further and select the ones that, are in an industry that we want to look at. Maybe we don't want, maybe we just want technology, etc., and biotech. Could also select market cap. So if we want only those with a significant market cap, if we want to exclude those, under a certain price, if we don't want penny stocks, again, we can do that. So again, I'll let you dig into this further. But again, a quick and easy way to find artificial intelligence stocks, and then you can select the various criteria that you want in this FinViz screener. You could sort by industry. So again, if we wanted to just see those in information technology that are profitable, we can sort through there, and then we can look at charts just by hovering over. So there's an education, etc. You can see, if you don't want to consider ones in China, you can just skip over those. So again, then once you find the ones that you like, then you can consider those either for a trading vehicle, given the current hype, excitement over artificial intelligence, AI, or for future investment. Again, we're looking at those that are actually making money currently. So that's what I would consider in terms of potentially looking at them now. A lot of them are going to be currently high due to the hype, and that's our next topic. And also, we showed last week in part 2, we've added a tab so I can copy out uh, the results of a FinViz screen. This is our ETF comparison spreadsheet, but I can use this for any list coming out of FinViz and then paste it into this FinViz tab, and then I could do my standard risk reward comparisons and see which ones have a type of risk reward profile that I'd want to consider. So again, I can filter them down in FinViz, and then I can do my further research and find the ones that have a risk reward profile that fits our criteria. So I hope that all helps. But please let me know if you want further information about how to use FinViz, how to use the ETF comparison Google Sheet. Again, this Google Sheet's accessible to all of our All Access and VIP Patreons. So you can use that worksheet, make a copy of it, and use it to filter and research any AI, artificial intelligence stocks that you would like as well. Also, last week I shared with you this article that has 20 AI stocks expected by analysts to rise 85%. So again, you can get at that article via this link in our notes. And then, we've been talking about, again, I'm concerned. I don't want to see anybody get too caught up in the hype. I think ChatGPT is great, and I agree with a lot of the analysts, etc., about the future. But I think, when everybody's talking about it, we talked about this before, when your Uber driver and your shoe shine person and your grandmother are talking about it, then that possibly at peak hype. Although I'm, again, a very positive note, I like that they're getting the press, etc., and hopefully this AI is finally crossing the chasm, starting up the product adoption, the technology adoption curve to get general adoption. Now, again, I would encourage you to watch both these videos about the Gartner hype cycle. What does it mean to hit peak hype? What happens when they start to decline into the trough of disillusionment? And how do we make money trading these hype cycles, and also the technology adoption curve. But again, you'll see in the technology adoption curve, once you reach general adoption, there's still a lot of laggards. And I think, the adoption of these technologies into companies is going to meet with some stiff resistance. Now, also the schools, one of my theses has always been, if you want to get a technology adopted, you get it in use in the schools, and 20 years later, you're going to see that technology become ubiquitous because the kids grew up using it. I mean, we saw this with PCs. Once Apple put PCs in the classrooms, that generation then was comfortable with PCs. We saw it with smartphones. Once the kids in school start using smartphones and they learned how to text, now, everybody's got to have a smartphone. But there's a lag. And I think, again, this is all my opinion. So take it for what it's worth. It's free. So again, take it for what it's worth. But again, I think people are believing that this is going to be generally adopted a lot faster than will actually happen. Again, you think about how long did it take the internet, PCs, smartphones, etc., from their initial release to the point where they were ubiquitous and generally adopted. So again, my opinion. Love to hear your opinion. Please comment in the comments below. Join us in the Discord. We can have a lively discussion, and I can express more of my opinions possibly in future videos, etc. If you all are interested. I do have a series of videos on how to use ChatGPT, how you can make money with ChatGPT, on our virtual consulting, our sister virtual consulting channel. So you can see that if you don't know how to use ChatGPT yet and are interested in that. So some other strategies we've been talking about for a little while is, and we saw this the past week, even when the CPI data was hot, they tried to, we got, in my humble opinion, irrational exuberance right after the initial down spike. They tried to run technology again. So be careful, when others are greedy, be fearful. And you can hear our thesis behind that via this bonus link in our notes. How to make money trading in February. We just released that short, so you can see the expectation for February as well as the expectation for the year. Here's what does the January barometer say, and again, this one's under construction, but you can listen to that via the link in our notes. And I agree, Flip. I see your comment, that the hype will subside. Yeah, again, you're already hearing too some disillusionment. It as we commented last week, it doesn't wash your car, it doesn't make your dinner. But again, I think it's great. I think it's going to be an enormous, and it may even be what Ray Kurzweil called the singularity. I could make a case for that. But again, it's going to take time. And again, I'll talk about that in more detail as we go forward. I don't want to spend too much time on a given topic because we're all here to know how we use these things to make money trading, right? Welcome, Walter Lyons. Thank you for joining us. Glad to see you as well. Hope you're doing well. We talked about layoffs, so there is a bonus video. You can hear some of our discussions on what happens when a company announces layoffs. Also, we're doing a whole series on dividend stocks. Several have been released. Some are still yet to be released and under construction. But again, you can view those videos via the bonus links in the notes. And then we've been talking about our option strategies. I want to get to some of the new topics in our option strategies. We've been talking about the wheel strategy. Again, in this choppy market, and you'll see I put this in part one now. I think, selling and buying back covered calls, selling and buying back puts, in our case, cash secured puts is a good way to make money, both dividend stocks. And again, we'll be talking about this more tomorrow, but I think these are two strategies that in a choppy, range bound, sideways moving market are ways that we can make money while we wait for the market to, pick a direction and trend in a stronger direction. So these are ones that we're actively pursuing, and I'm working on, optimizing, revising, evolving our strategies in these areas. And we've talked about this for some period. Also, we have some, questions we'd like your responses to, your experience from in our Discord. I want to highlight this one. Is I should have highlighted that. I will. And I'll show you. So now I'm at the point where I'm trying to figure out how to price selling these options. So I asked, I'd love to hear your feedback. We have a topic in our Discord. I'll bring that up. And again, you can click the link in there, join our Discord, and then you'll see I asked ChatGPT this question. So I asked ChatGPT how to price the options. So I said, give me the detailed steps on how to calculate the price at which to sell an option. And here's ChatGPT's answer. So you can both read this answer in this Discord posting, and then you can, let me know, what do you think of ChatGPT's answer? So again, I thought the answer was pretty good, and I'm going to try to implement at least part of that response, if I can, into our option strategy, how we price options, in our automated systems, and then we'll see what changes to make in our puts return on invested capital sheet. And again, we'll review all that tomorrow. I don't know if I'll make any progress today in this implementation, but that's kind of the plan going forward. Is with the decrease in volatility recently, I noticed the premium prices were down. So, and I was even the ones that had a positive, attractive return on invested capital, I was having difficulty trying to figure out at which price to set the sells, so both they would hit and offer a reasonable return on the invested capital to make it worthwhile selling. So again, that's why I'm focusing now on the pricing area. We've been focusing on identification of potential stocks to sell puts on, and I think we've got a reasonable way to do that now with our puts ROIC Google sheet, and now I'm trying to figure out how to price them to get them to sell and make us money again while we wait for the market to pick a direction trend. If it's trending down, selling cash secured puts is another, again, a good way to make money. So oh, okay, Flippa. I see your comment about the Bing thing. I commented before. I'll just very quickly comment. I was disappointed at both Microsoft and Google are just trying to put the Chat GPT technology in their search engine. Now I understand why Microsoft is doing is they already have an ad framework, so they already have a way to monetize it, and they're thinking it's going to give Bing a boost, and it is a little bit, but again, I was disappointed that was their focus, was using it in their search engines. I think it has much broader, more useful capabilities than that. We'll see if they catch on to that or not, and maybe I'll babble about that in future videos or future game plans. And we saw, Google took a hit when their Bard, didn't do well, didn't answer questions well. And again, I think that's going to be a negative on Google for the near future. Although again, one of these days I'll talk in more detail about my experience. I've got experience with Amazon's, Microsoft's, and Google's AI technologies going years back. So again, maybe in the future I'll talk in more detail about my experience in those areas. Quick question, and then I'll take whatever questions are left with the chat. Is one of our fellow BeachBum traders recently sent us some suggestions in a Patreon message and gave me permission to post them in our Discord. So I've done so. So please go and vote in essentially a poll whether you like these suggestions. One is asking for a list of stocks that we're holding. They said, following the alerts was more difficult. So I'm trying to figure out a way to do that, and that doesn't create a lot of additional work, but that would be useful to our fellow BeachBum traders. So let me know your thoughts on that. Again, we have a topic in the Discord in the suggestion box, so please give us your feedback on that. And then they also asked for the links to the non-compliance websites that we use. So I was able to implement that. So I've added links to the non-compliance websites that we use, the sites we use to identify non-compliant. So again, this will help you identify those that are at risk of being delisted, at risk of executing a reverse split. You can see how we do this in detail in this video, how to find non-compliant companies, and how it uses these links and some automation to, again, find ones that are at risk of being delisted or reverse split, And I've added those to the reference links category under the links on our webpage. So our webpage, beachbumtrading.com, bum without the U. And if you find the links section, again, you can find all the invite to our Discord, links to all our social media sites, trading platforms, tools. And if you go to reference links, now you can find the links to the sites we use to identify non-compliant. So there's NASDAQ non-compliant, NYSE, and then you do a search in the SEC Edgar, and you can find companies that are either at risk they reported, announced a reverse split, or they've got a non-compliant notice, and therefore they may be at risk of delisting, or more often they're going to reverse split to regain compliance. And again, those are risks to any stock like that you're holding. So we hope that all helps. And yeah, Easy Mike, we've been talking about that, announcing a layoff, as an initial pump to a stock. I do want to talk about the longer term implications of these layoffs, but probably not today. So finally, question about dividends. Please vote in the polls if you would like an automated feed in our Discord, and if so, where, for dividend hikes, if that would help you identify dividend stocks. I put this poll both in our Discord, our Facebook group, and also on the community tab on our YouTube channel. So you can vote in any of those locations. We'd like to know if you'd like a new Discord channel, or if you'd like it included as another feed in one of our existing Discord channels. Let us know. Again, any other suggestions you have for improvement for our videos, for our Discord, for our systems, please post those in our suggestion box in our Discord, or you can always put them in the comments to a video, or in our Facebook group, or you can contact us directly via any of our social media links. Same way with any other questions you may have, anything else we can do to help you make money trading, succeed in your trading career. Again, you can put those in the comments in our Discord, Facebook group, or always contact us again via any of our social media links. So again, you can find an invite to our Discord in the description box below, and also on our homepage, etc. So unless there are any last minute questions, we'll wrap up, and hopefully you will come back tomorrow for part 2. We'll take all this information, all this market analysis, and we will select our top swing trading stocks. We'll also talk about dividend stocks and options, potential options to sell puts against, and further enhancements to our systems in those regards. So hopefully we'll see you again tomorrow, 10 a.m. Eastern time. On Sundays we do part 2, so same bat time, same bat channel. And again, if you have any questions or recommendations for reviewing a particular stocks, let us know in the comments, in the Discord, etc. So we'll do what we can to cover those tomorrow. So thank you to everyone that joined us for part 1, and we hope to see you all tomorrow for part 2. Thank you again, and have a great day.